Good morning, welcome to the Phoenix Blue update on Friday the 21st of April, presented this morning by Tom Colley. Well, we've had a quiet week in the markets following the announcement of the UK election on Tuesday. We were expecting it to be a quiet week without that event, and that's the way it's played out. We're on the back of a 4-day Easter bank holiday. Not a lot of really big news scheduled to affect the markets, and that's exactly what we've seen in the intervening time. But we have a huge event coming up at the weekend, which is the first round of the French presidential election. So let's have a quick look at that along with the other news items. Well, what we saw yesterday was the manufacturing index for the US coming in below forecast, but the weekly unemployment claims about bang on forecast. We had two speeches by the Bank of England Governor Carney, neither of which said anything significant in respect of the markets, and there was little or no reactions to that. However, what Treasury Secretary Mnuchin said yesterday, both at this meeting and predominantly more so on a television interview, did generate more interest in the markets. It saw a rally on the dollar. He was very matter of fact and stated that the tax cuts were definitely going to go ahead. They would go ahead irrespective of what happened to the Trump administration's healthcare plans. In another aside, the healthcare plans raised their head again. There are rumours that there may be a revised bill going in front of Congress next week, so we could actually get some resolution potentially in that area as well. So the news coming out of there, bullish for the dollar. We'll see that on the dollar index and against other currencies in a moment. What have we got today? Well, month-on-month retail sales for the pound, obviously going to be closely watched, bearing in mind what's happening at the moment, or to be fair, what's going to be happening for the next 2 years. We've got the CPI out for the Canadian dollar, and that's it for the trading day today. Over the weekend, we've got Treasury Secretary Mnuchin speaking again. Might be worth trying to catch up on exactly what he says and see if there's any more that comes out with respect to what he's already said about taxation. Then we have what effectively is the big one, or certainly the big one for the Eurozone, and that is the French presidential election. Now, according to polls, and we know how risky polls can be following the events of last year, but there are four main candidates, all of which are very closely matched. Emmanuel Macron is apparently gaining ground at this moment in time and is anticipated to be the winner of the first round. The first round will select two potential presidents to go head to head in the second round of the votes. But as you can see from those numbers there, in principle, any combination of those four, including the one that the EU fears and potentially Euro traders fear, Marine Le Pen, they all have good chances of going through. The combination that goes through is what could cause concern. However, latest polls suggest that irrespective of whether Le Pen goes through to the second round of election, it would not be possible for her to win in any circumstances if she faced either of the other three, because based on polls of how voters for the losing two parties who don't make it into the final, how their votes would likely be transferred or otherwise. So we could well see Le Pen in the second round, but I don't see that, based on the polls, that isn't perceived as big a risk as might be assumed, for the simple reason that the figures suggest that it's not possible for her to win that second round. But as I said, I'll restate what we've seen in 2016, that anything can happen. I certainly will be having all my trades closed and everything nailed down for the weekend, and we could well expect gaps on the euro and the euro crosses on the open Sunday night. That, to be fair, that that may not be the case, because it depends exactly what time the results come through, but certainly there'll be a risk element through that Sunday open and through Monday morning as the results are clarified. Okay, here we have the dollar index, and as you can see, yesterday we had a big push down and then a rejection of this 99.25 level, which I think really is a rejection of this upward trend line here. It was matched by something similar on the euro that they came later in the day at European time, as we had the statements from Treasury Secretary Mnuchin in the States that I've already mentioned. We're still below the key $100 level here on the dollar index, which is acting as our point of control in this triangle formation. Our view still remains bullish on the dollar mid to longer term, and will do so until we break this $99 level, which is the low of the year, and or this rising trend line at the bottom of the triangle. Over on the yen, well, we're seeing a pullback on the yen. We've had this concerted move, or certainly two-leg move down on yen strength over recent weeks. We're looking for a pullback now to take it further, to take a further leg down, with targets looking around this 106.85 level through support level, which has some nice support through and historically over there. You'll see I've got a trade here at around 110.10. This is a short trade looking for the top of this pullback here to take that back down to the short side. There is another level through there. You've got to see it marked at 109.85. Looking at how that trend line falls there, it's quite possible that could be a level that's respected today before the move down. However, it doesn't offer sufficient support and resistance historically to be a level that trades. This level through here is clearly a very nice level. There's been a lot of interaction. There's 3 tips through there, bang on that sort of level. So that's a cautious trade in that respect. We'll look for, if price doesn't come down there, then we'll look to get into this move on the downside intraday through next week. Over on the euro, well, as I've said, a complete reverse of the dollar index as we expect. Interesting formation through here. Price pushed up right up here to this 107.770 level. I actually had an order in there at 107.77 yesterday, and it missed purely by the spread, and that ended up being a lovely, it was an intraday trade with a 20 pip stop. It would have been a 3%. It would have ended the day 3% up, that trade. But as we say, that's trading. I'd chosen that level to place my trade, and I won't chase price if it doesn't miss it. If it misses it, I just stay out of the trade. What that does set us up here, we've got a level here through here at 107.40-ish on an intraday chart, which has the potential of being the right-hand shoulders of this head and shoulders through there, with 107 a clear level, round number being the neckline of that. As you can see, I've got an intraday order waiting there on that right hand neckline. I will be looking to close that trade for the reasons that I've already mentioned in respect of the French elections before that occurs. But we are looking for further downside in this market on a break. Retest of that 107 level, in which case potentially that head and shoulders would have played out in that respect. Over on the pound, well, let's choose this huge bar. We've seen very much indecision since then. Price hasn't pulled back, it hasn't neither broken the level above. For me, the next significant level and level that I'm watching for a pullback is 1.27 through there. If we get a pullback through there today, I would look for the opportunity to take that to the long side, again on an intraday basis. And then the only other way that I'd be interested in this market is we break through this 1.29 level, which was the high on Tuesday. So two clear areas that I'm interested in, and there's nothing in between for me. So I'll just wait patiently for price either to pull back here and give me an entry, or for it to break, pull back and retest for an entry to the long side there. Another market we're interested in today is the Aussie. We were looking for an order through this level at 0.7560. Yesterday, price didn't reach that level. It appears to have stopped at the level below at 0.7540, in conjunction with a recovery in the dollar yesterday following those comments out of the States. This is still a good level. I still have an intraday order in place there. I'm not expecting it now to be hit, but if price does break this 7540 level, then that remains an excellent level in order to take an intraday level short. This level had already been hit today, so it doesn't give me an opportunity. It's too close to current price. We are looking for price to come to the downside, take out these lows here, and our initial targets, should we get into this trade anyway, will be the lows here at around 7,475, but we still anticipate price to fall below that, break these lows and form the second leg of that movement through there from A, B, C to D, down to that level. That clearly relies upon dollar strength playing out. Okay guys, that's it for today. We are just putting together the date for the next free training event. I'm sure we'll have that for you by Monday. If you pop onto the website, and there'll be a link appearing here shortly, you can go through there and register your interest ahead of that, and then we can advise you directly and send you drawing instructions, etc. Okay, so the French elections over the weekend. Have a good weekend, a good rest, and let's have a look at what happens and what opportunities we have in the market following our weekend analysis next week. Okay, have a great weekend. Goodbye.